Zerodha Fund House recently announced the beginning of its passive journey in the asset management industry. The fund house has launched two maiden new fund offers, Zerodha Nifty Large Midcap 250 Index Fund and Zerodha ELSS Tax Saver Nifty Large Midcap 250 Index Fund. November 3 is the last day to apply in these NFOs. After that, investors will have the option to purchase units of these open-ended funds at the prevailing market net asset value on any business day. The two schemes will invest in stocks in proportion to the weightage of the stocks in the Nifty Large Midcap 250 Index. ELS scheme will also provide tax benefits. Passive funds are those mutual funds which are not actively managed by fund managers. They mirror a particular index and is usually rebalanced every 6 months. By comparison, active funds are directly managed by dedicated fund managers and involve high cost. Over the years, passive funds have been gaining popularity given low cost, output options, low risk of underperformance, etc. But should you invest in Zerodha's latest offerings? Remember, Zerodha Fund House has entered the asset management industry when the competition has heated up. Helios MF has ventured into active fund space while Grow and Geo BlackRock too are vying to enter the Indian asset management market.
Mid caps generally tend to be slightly more volatile than the large cap counterparts. The addition of large caps also in the mix could bring down the blended average of expected volatility significantly. Also, this fund looks really good for new investors who want to participate in the Indian equities growth story but are unable to make the decision on which actively managed fund is better than the other. So, this is a low cost, efficient way for new mutual fund investors to experience how equity mutual funds operate.
During the month of September, large and mid-cap fund category saw net inflow worth 1,334 crore rupees. By comparison, the large cap fund category saw outflow of 111 crore rupees, while mid-cap fund category saw inflow of 2,001 crore rupees. Meanwhile, Vishal Dhawan of Plan Ahead Advisors sees an added advantage for Zerodha's passive ELSS fund apart from tax savings.
Every time the mid-cap index does better than the large cap indices, you will find that the active ELSS funds outperform. And when the mid-cap index does worse than the large cap indices, you will find that the ELSS funds which are active underperform. So what this fund technically goes out and does is buys both of these segments of the market. And obviously, because it's an index fund, it's going to be available at a low cost. And I think it could be a good option for investors to look at. Once again, considering that it is equity only, even though it has a 3-year lock-in, it may be advisable for investors to go in through a...
Experts suggest that Zerodha's offerings are apt for high-risk tolerant investors who want a blend of large cap and mid-cap exposure. On November 3, India's services PMI data, Q2 results and global cues will guide the sentiment.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.